and it moves the same with mortgage rates. So it correlates positively. When TMX goes up, typically so does mortgage rates. And so you can see here on Friday when we had the tariff news released and the stock market jumped about 1,000 points, rates basically also went up. So we've been hovering just under 7% for a 30-year fixed primary home, depending on credit scores and other things. So that's just a relative idea of what rates are for a primary home. But you can see that it gapped up quite a bit on Friday, that rates increased. And if we look at a kind of a longer time frame of 3 months, or let's go to the 6-month time frame real quick. And when we do that, we can see here that we're kind of at a resistance level back to when November was here, 4.49 roughly. And right now we're at 4.46 or so, or 4.47. So anyways, you can kind of see we're a little bit at a resistance level. It'll be interesting to see if rates continue to climb a little bit, if we might exceed 7%. So I just thought it was worth highlighting that. Another article or news update that we should be aware of is the annual inflation rate hit 2.3% in April, which is actually lower than really expectations of the market. So that hopefully will impact rates positively and have them be lower, but we aren't really seeing the results from it. It's always kind of interesting to see how the market sometimes just does the opposite of what we think. So when we look at some of these factors here, you can see that this is the consumer price index rose a seasonally adjusted 0.2% for the month, putting the 12-month inflation rate at 2.3%, its lowest since February 2021. So really, as far as inflation goes, it looks like we're having some positive results in the economy. This is probably a good article to just briefly recap, but just wanted to give an update on rates because it's kind of going a different direction than you would think. And I hope you found this helpful.